Welcome back to TechKidFX for another Agix price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Agix chart, which at the time of this recording has lost the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also continued to obey the Elliot structures, and before I get further into the technical analysis and also give you my next price targets here on the Agix chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first drawing out the Elliot structure that has continued to be obeyed, where I'm terming this as the first wave to the upside, making our peak at around the $0.13018 mark. And after seeing the high for that first wave, whatever we expected next is a corrective structure in the formation of that wave 2, which we have seen over here. And after seeing the low for that second wave, we expected a massive bounce to the upside in the formation of that wave 3, and we have seen it over here, giving us a peak at around the $0.66874 mark. And after seeing the high for that wave 3, whatever we expected next is a corrective structure in the formation of that wave 4 before we can continue pushing even higher in the formation of that wave 5. And in the formation of this wave 3, which is an impulsive wave, I also expected to see a 5-wave structure in formation, and I believe we are seeing such a move over here, having this as the first wave to the upside. Then we have seen the formation of that wave 2, then a wave 3, then a wave 4, and then a wave 5, which has fully maximized the formation of that higher Elliott wave count 3 to the upside. And I can change the color of that fractal wave, which is within the formation of that larger Elliott wave count 3. And after seeing the formation of a larger Elliott wave count 3, whatever we expect next is a corrective structure in the formation of this wave 4, and sketching out minimum target areas to the lower side in the formation of this wave 4 by connecting the Fibonacci's from the low of the second wave to the high of that wave 3. That gives me a minimum target area to the lower side in the formation of that wave 4 between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the chart, which lies between the $0.44592 mark and the $0.36798 mark, which is a target area that we have fully maximized. And after fully maximizing that target area, you can now see that we have lost the fib level 0.5, and now I have to extend my target area back to the fib level 0.618, so that the target area now lies between the $0.44592 mark and the $0.029 mark, and it is within this yellow target area that I'm expecting to see the low for this fourth wave to the lower side. And once that happens, then we can expect a massive bounce to the upside in the formation of this wave 5. And for us to get back into the formation of that wave 5, there are key moves that I'm expecting here on the Agix chart. And the first move is a break above the 20-day MA, and the moment we manage to break above the 20-day MA, the next point that I'll be watching is the high that we made in the formation of this wave 3 at around the $0.69 mark. And once we manage to break above the wave 3 high and also the 20-day MA, then that will be enough confirmation that whatever we are seeing over here is the bounce to the upside in the formation of that wave 5, and sketching out a minimum target area to the upside in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gives me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.83892 mark, and that is the minimum that I will expect that wave 5 to the upside to do. And once the wave 5 is in, then we can name this 5-wave structure to the upside as a larger Elliott wave count 1 to the upside. And getting into details in the formation of this wave 4, where we can also expect a worst case scenario in case we continue trading below the 20-day MA, then there are chances of fully maximizing our yellow target area by going back to the area at around the $0.29 mark and fully maximize our target area in the formation of that wave 4, and that is what we can expect on the worst case scenario. But in case we lose the fib level 0.618, then I'll be expecting the next key area on the Fibonacci's to also hold, which is the fib level 0.78, and connecting the Fibonacci's once more from the low of the second wave, which is down here. You can see that the fib level 0.78 lies at around the $0.178 $0.844 mark. So in case we lose the fib level 0.618, the next key area on the Fibonacci's that we can watch is the fib level 0.78, and that can only happen in case the breakdown continues in the crypto market. But I'm optimistic that we have seen the low for this fourth wave, and there are chances that soon, the moment we see an increase in the buying volume here on the AGIX chart, we are going to continue pushing even higher and explode in the formation of this wave 5, and also fully maximize our target areas in the formation of that wave 5. And also taking a look at the indicators here on the RSI, we are trading at around the 39 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 5. Also, the RSI still supports the worst case scenario of fully maximizing our yellow target area at around the $0.29 mark. Also taking a look at the MACD, we have been able to print a bearish cross, fully supporting lower prices to fully maximize our yellow target area in the formation of that wave 4. So let's be patient and see how that plays out, and I'll be keeping you updated.